Hello and welcome to another video. Today we are going to look at what cash flow statements are. So let's start. What is a cash flow statement? A cash flow statement is actually a type of financial statement. So there are four types of financial statements. There's actually a video on financial statements in this playlist where you can watch what financial statements are and the types of financial statements. So cash flow is just one of the types of financial statements, and this provides us an information on companies' cash inflows and cash outflows, right? So it will provide you as an investor or any other person with the company's cash inflow and outflow, basically cash flow activities. There are three main sections in a cash flow statement. So if you generally speaking look at a cash flow statement, I have an example, just a simple example at the end of this slide, showing you a cash flow statement. It will mainly contain of three sections. The first one would be operating, second would be investing, and then the following would be a financing activities section. There are two methods that a company can prepare an operating activities section, that is a direct method and an indirect method. Most of the companies, they use indirect method to prepare the operating activities section. So they use indirect, some say it's easy, some say it's difficult. It's really, it's a matter of judgment, I would say. So most of the companies, they use indirect method to prepare an operating activities section. And the cash flow statements, of course, you see there are several stakeholders in a business environment. There are investors, there are tax authorities, which is basically, let's say, government authorities. There would be your competitors, other businesses which will be interested in buying you. So basically competitors, right? So cash flow statement, in other words, basically helps you understand company's cash position. So cash flow provides you an understanding of a company's cash position. So let's look at what each of these activities actually mean. So in operating activities section, which is the first section, it summarizes the cash generated from daily operations, that is buying and selling. So in general, a business is always selling something and buying something. If it's a trading business, you always have, you would have an inventory. Let's say you purchase inventory on credit, company purchases an inventory on credit, company sells goods on credit. So there's a constant buying and selling activity going on that would be considered as a part of daily operations, and therefore cash flow from such activities would be considered as cash flow from operating activities. Cash flow from investing activities, this is the second section followed by operating activities. So after operating activities, you will see investing activities section, and this section basically summarizes the cash flow from business investments, and here are these few examples of what you would see, what you would see in a company's investing activities section under cash flow statement, right? So business investments could include, for example, a business would purchase or make an investment in an associate. So you can have investments in other businesses. You can buy a subsidiary as well. Right, and then, for example, there could be purchases of non-current assets. So it is not really necessary that it has to be purchased. It could be sale of non-current asset, a sale of non-current asset. This also comes in investing activity section. Right? So equally, it could be sale of long-term investment. So this could also be sale of long-term investments, right? So these are just few examples of what investing activities would include. Now, the last section is financing activity. So financing activity basically provides you summary of cash flow from businesses' long-term liability and equity section. So if you look at the balance sheet, it's mainly looking at the changes in liability and equity, right? So because there are only two ways the company can obtain finance. It's either loan or issuance of share capital, issuance of shares, or let's say share capital. Right, so therefore you have here examples of financing activity. These are very common examples of bank loan and issuance of ordinary share capital. They would be reported in the financing activities section of the cash flow statement. So here's an example of a cash flow statement. So basically you would start with the name of the company. So Virtual Co is the name of the company. Then you have a title here, statement of cash flows using indirect method, because they have used indirect method here for the operating activities section, right? And then you have for the year ended 31st December. So this is for the year ended 31st December 2018, right? So this is a very standard format for the cash flow statement. You start with the company name, the title of the financial statement, the period, and then you start with the cash flow statement, right? So you have operating activities section here, and then you have investing activities section here, and then you have the financing activities section here, right? So 3 sections here, and then it will give you the total cash flow increase or decrease. So in this case, this is a negative number. So this is basically, you know, during the year, what happened, like there was a total cash flow decrease. And then you would have this total ending balance here. This is also a reconciliation statement. This, you can also call this a reconciliation statement. Why? Because this 66,700. So if we had the balance sheet of Virtual Co, this is same number as balance sheet. This is same number as balance sheet, right? And then we can look at the activities reported under each of these activities. So if you look at operating activities, depreciation is a non-cash expense. Therefore, it's added back. You first of all, you start with the net income, and then you add back a non-cash expense, which is depreciation. So you add it back because depreciation is just an accounting number. It's not actually an expense. It's not actually, you are not paying depreciation to someone. It's just a number that you charge in the income statement. Then there's these gain on sale of plant assets. So you basically in your income statement you would have added, but in your cash flow you subtracted. The reason behind being it's because you add the proceeds from sale of investments, from the sale of investments, right? So basically that's why you do this here. Then you have these changes in working capital, so changes in accounts receivable, prepaid insurance, accounts payable. These are all related to your day-to-day business activity, right? Accounts receivable will occur because you sold goods on credit, right? You sold goods on credit. And then you have the cash flow from investing activities, where you would see the changes in cash flow occurred due to investments, right? So let's say these are the proceeds from the sale of investment. The company sold some investments, and the business earned this. So therefore, you add this 47,500 here. And then if you look at the cost, these are like cash outflows, so minus. Similarly, for cash flow from financing activities, you see payments for note payable. This is a long-term liability. So any change in long-term liability, or if you issue a common stock, so the company received 30,000 more, so you added, you paid payments, so it's a payment cash outflow, so you deduct this, right? Payment of dividends, it's again related to your ordinary shareholders, so you paid this minus 8,000. So if you look at the financing activity, this is basically, this section is mainly concerned at the liability and equity section of balance sheet. And then you would sum these numbers to calculate this change, total cash flow increase or decrease. You will add the opening cash balance to get the closing cash balance. So this is opening cash balance, and then this is the closing cash balance. Thank you very much for watching this video. I hope this video was helpful to you. If you like this video, please give it a thumbs up and subscribe to my channel for more videos like these. Thank you very much.